Good morning, guys. Welcome to this Friday, September 12th. And the market is holding on to their gains. Yesterday we had a pretty freaking awesome day. Market took off to the upside, never looked back. We held on to their gains. And in the overnight, we just got the traditional little bit of weakness, and so far it's holding on there pretty good. So we are in price discovery to the upside when it comes to the ES at least. Nasdaq is kind of getting there, but not quite. Now, obviously, you have uh, the usual suspects, I guess you should call them. It's starting to predict the market crashes, but at this point, I'm not going to worry too much about it. The market is unless you find something out there geopolitically or in the economy which could cause it, fine. If you have a regular profit-taking day, that could be like a pretty scary thing, but it doesn't mean that anything changes in the bigger picture. Now, we got the PPI come out on Wednesday. We had the CPI yesterday. Neither of them, PPI was super low. CPI was pretty much in line, maybe a tenth of a tick higher on the month to month, but nothing really is spectacular in terms of surprise, bad news. Today we get the consumer sentiment at 10. That's about it. So not a whole lot of news to drive the market today, this Friday. We have consumer sentiment at 10, and pretty much that wraps up the news cycle. Now we also had an event. I think it was Tuesday or Wednesday. The Nasdaq popped late in the session. That was the Oracle earnings report came out, and just Oracle popped like 40% to the upside. That was pretty crazy as to see. But overall, earnings and companies are doing great. Um, and usually this time of the year, usually it's a seasonally weak time, and usually we have a lot more selling and volatility. So I had to say we only had a little bit beginning of August a few days, and we had a little bit of beginning of September a couple of days or a day, and that's it. So far we haven't had a whole lot of weakness, but doesn't mean it can't come. So as you know, we can certainly kick in and create and have a little bit of profit taking going on. But if you look at the capital flow right now, we were at that 64.80 for a bit. We had that little pop to the upside, then we had a little holding. Let's say we had a. This is pretty much where they started popping here back in. Let's see. Why should I do this? So this trading day is this is the 18th. So, oh, this is the 8th. So this is 7th. So this is the Friday. So we had a little bit of moves up and down. Going around that 64.80s, and then we have started slowly moving higher. Employment situation on Friday was the one which started. It felt like it was going to be crazy. It was the bad news was bad news. It sold off pretty good and stayed down there. That was that Friday employment situation, and since then it's been grinding higher, made new highs. And if I keep following this together, these are days we have been extending every day now since beginning of the week. So we're staying in the move out of the middle to the upside, and I would just stay on the long side of this. Look to buy weakness and see how far they can take it. Uh, so looking to buy as it gets started against that 65.85s. That would be kind of aggressive. We have 65.75. That would be the London low. 65.60s, 65.50s for rotations back up 50, 55 maybe. We have that BC ledge there right there. I didn't want to make it create another level there, but it could be a level there. It could be that if they run below that 75, they run down to that ledge. If I don't want to make that big, like I want to make that edge a little bit more precise. So but that could be something to pay attention to. Excuse me. So looking to buy weakness all the way down here to that 65.60s, maybe 65.50, 55s here, but below that one, I think we are right back in this lower range again. So below the 65, let me see, 65, where are you? 60s, yeah. So you see this two little edge up here? If that area comes out, we can certainly start retracing back towards this attract at the 64.75. But at this point, starting looking to buy early weakness for rotations back up. If they back off more than that 65, 50, 55 support area, I'm taking off the long bias, going back to range bound for the trading day at least. Now, if they back off further than that, we have that three-letter edge at 65.30, 30 to 35. And then that's when you're down here in these lower areas. If that starts happening, yeah, you can start kind of considering the short side. You can consider the short side earlier on too, if you. I'll show that in a second here. But so the 65, 35s, 25s, 15s here, these are the support areas. If all these come out, we are in trouble. At that point, things are going sideways for us. But if you want to try a short trade, I would do that after that 65.75 comes out. And I would just be hopping on that early weakness. So if they start backing off, you can't, you don't get any opportunities at 85. They start running the 75s. I would look for a potential short trade there. Would be a go with trade, look for a little pullback, try to get short with a good enough trade location. And at that point, you have great trade location for potentially running this down here to test the 60s or 55s. Now, if that doesn't happen, and then they just run the stops, and you happen to be short, you're just on the wrong side of it, just a tight stop gets you out. And there's no point in making that trade bigger. So if you're trying to get short there on a little early weakness trade, and it doesn't go your way, just get out of that trade pretty quick. If they keep going, and I would still be looking to buying against that 65-60s, the 50-55s, the 45s, 35s, 25s down here to the 15s. But as I said, we're taking off the long bias below these two support areas, the 60s and the 55, 50, 55 and the 60s. And if they start taking out that 65 15s, well, then the bets are off. And it looks at that point, it looks like we have one of those profit taking days. But if you think about it, if you're trying to get short and early weakness, and you can get in at around about 65 to 70s as they take out that support area, you would be in pretty good shape if that kind of a day develops. But initially, right now, we're starting off on the long side. We're trading and move out of the middle to the upside. So we're looking to buy early weakness, and the short trade I talked about is just that, hopping on an early weakness kind of a trade. Otherwise, if you want to be patient, don't do that because it's always pretty scary. Wait for them to come to support areas, look for buying opportunities, and for rotations back up again. On the way up, looking for shorts against that 6590s and the 6600s with a bit of caution. We are in the move out of the middle to the upside, so I wouldn't be super aggressive on it. I think the best short may come right early on here at the 6590s if they run up here, bounce, and then start trading lower a bit. But that's, I wouldn't be super aggressive on that. All right, so that is the ES to get started. Looking at the NASDAQ and the bonds. The bond market has been trading higher. They're in the move out of the middle to the upside as well, and not as nicely. It's a pretty sloppy move, but it's slowly grinding higher. And as you can see, we are pretty clearly moving higher outside that this attractor at the 114s. We're up at the 117.16 to 118s. And yesterday looks like they want to try to take it higher. Now they kind of backed off a bit. So it's anyone's guess if they're going to stay around this 117.16 attractor area at this point. It almost looks like it. So let's be mindful. Unless they start extending past that 118s, we're most likely going to stay around that attractor 117.16. So then I would I would start off with a slight bias to the upside still, see if they can extend. But if they can't, I would just go back range bound, looking to buy support down to the 117s, looking to sell strength up to the 118s. That's pretty much the dynamic there. So at this point, they're backing off a little bit, looking to buy against that 1716s, 1712, 1708s, 1702s. They're going to sell strength against the 1728s and the 118.05 to 6. It's for rotations back down. Now, yesterday we had two great opportunities on the short side on the bonds, and I tried to get short on one of them. Since it got stalled there for a long time, I canceled that order. Turned out that would have faded 3 ticks of heat and then been a great trade, but I could have traded that a little bit differently and been in a better spot, but I just canceled it and left it. But that was a couple of great setups on the bonds yesterday. And they used to set up the edges pretty good. So unless you have a sloppy day on the bonds, usually the edges with the retest failures work pretty freaking good. It is a little bit bigger contract, you had to trade 31 bucks a tick, so it just gets a little bit more scary, but that's how it goes. On the NASDAQ, And remember, today normally today we would have rolled to the December contract. I changed that, I delayed it a day on the server side. So we are trading September right now, and we're going to roll on Monday to the December contract, as you know. So this is a change in how I usually do it. That's because the volume tends to roll slower for some reason. So we are staying on the U for today. Now that also means that instead of starting off very light on volume, like usually what happens on a Friday, we're still good on volume. But towards the end of the day, most likely you're going to see the market thin out a bit. So I would be a little bit less aggressive trading these at the end of the trading day, uh, if you can help it. All right. Nasdaq is to the upside. They are right up here against the breakout point, right? So look at that. It looks like they're gonna, and I'm not sure they're gonna make it, but they're right up here against that 24,030 to 40s. And it looks like they're running into pretty good resistance. Yesterday, you saw they could not take it above that 24,040s. Nice five-letter edge. They're up here retesting it now. If they can't take it out, we may see a nice pullback right off that. Retest failure in the bigger picture. And then at one point, if they can't take it higher, someone is going to cover their trades, cover their positions, and you'll find some selling kicking in. That could very well happen. So that's this setup here is one of the it's a great trading setup. It just it just little bit scary in terms of getting short up here when they're building value, because they can just as well start taking this out. They've been up here quite a few times. Initially, we got a couple of nice knockdowns. They were up here on that on the news. Yes, I think this was this PPI news popped up and then reverse hard. They're back here, retest here, and one of the retests, and they backed off a little bit yesterday. Now they're back up, retesting it again. So at one point they're going to take it out, but it's that the back trade-off. Are we going to see a retest failure setting up here for a bigger pullback, or are they going to be able to squeeze it higher? So we'll see. But I mean, if you do try a short trade up here, 24,040s or 50s, make sure you have a tight stop, and if they start heading higher, just get out of it. It's always difficult because I mean, when they have a bigger picture like that, usually there are day trading stops is usually not sufficient to stick with the trade. You come up here, they knock it down. A 100 tick stop, it's just not sufficient. But here you have like a little example right here on the F2, F4. They popped a little bit, start taking it higher, got knocked down, trying it again. Uh, so just watch it. If you it could set up a nice retest failure, and if you want to be a little bit less aggressive on it, wait for them to take out that London low at the 23,960s. If that level comes out, that's your short setup for rotations back down. That would be that early weakness. If they start taking this higher, fails, then starts taking out that London low at 960s, I would be all over the short side on that. If you see early weakness, though, it keeps. We don't see them tend to take it higher, but they start trading lower. And I would look to buy against the 960 or the 99 or the 24,000s, the 970s, 960, 970s, the 900s down to the 860s, maybe the 830s. If they back off more than that, I think we have our answer, right? So it's all about, it depends a bit how this develops. If you can see them really trying to take this higher, failing, and then start taking out that 960, that is a retest failure developing. Then I would be more aggressive. If you just start seeing this one going sideways, regular start trading, slopping back and forth, and then start backing off, that could just be early weakness. So it's going to be a little bit of a judgment call today to figure out what is what on that one. And then finally, oil and gold. But I would start on the long side on both ES and NASDAQ. NASDAQ just have that little caveat on the setup that you're right up here against resistance, and it could be a retest failure setting up. Excuse me. Lingering freaking cough. I cannot get rid of it. Like annoying. And as soon as you work out, it kind of comes right back up, right back at you again. I just had to work. I rest a little bit, I guess. Anyway, so gold. Back to the attractor at 36.80, 70 to 80. They were down here testing support. They're back up again. I would just start off range bound on gold. Pretty tight range. Look to sell up to that 36.96. So at this point against the 89s, 90s, and the 95, 96s for rotations down. Look to buy against the 75s, 70s, 60s, down to the 50, 52s here for rotations back up. So that's your range, and it's pretty much just sitting there. Consolidating a pretty big move, that you can tell. It has been a pretty solid move from 3,400 all the way up here to the 36.8, so almost 250 points to the upside. So that right now they're consolidating a bit. We'll see if they take out this nice volume edge, and that's your 95, 96s right there. If that comes out, stay on the long side and see how far they can take it. And if they just stay, unless they trade below that area, the where is it? The 50s should be down here. You'll be all the way down to that lower volume edge. If they take out that lower volume edge, I would be more aggressive looking for a run down here to that 3600s at that point. But right now, starting off range bound on gold, we'll see what's going to happen with that one. And then oil to the upside. I mean, you can see that the F4 has been straight shot up in the London session. They were down here, not quite down to the lows, but it looks to me like they tried to retest the lows. So here we had the retest. They were grinding this higher all the way up to the 64 level, then right back down here to the 61.75 in the overnight. And now it's right back up. It looks like this is your retest failure. Didn't quite make it to 61.40s, but looks to me like a pretty solid retest failure. Then start taking out the highs. And here you have him taking out the session highs at 62.30s and just keeps going. So when that starts happening, you get an attempt to take it lower like that, then they fail and start retracing and start taking out the high of the other side of the market. That's when you get the good reversal trade going. And these guys are right back up to the attractor right now. So stay on the long side on oil just in the short term, like to get started. I would look for shorts against the 63.70s and 64s, or potentially just running out of gas and staying sideways there. So that's the dynamic I'm looking at right now on oil. Haven't traded oil for a while, but you can see that's a net grind. That someone is buying oil, net buying oil, that's for sure. All right. We're going to be rolling oil here in a few days, I think, to the December contract as well. It's getting close to the rollover as well. Alrighty, guys. So that's oil and gold. So starting off on the long side on oil at least to get started. And then be mindful, we are right up to that attractor right now. So let's see how much further they can take it. And gold just range bound right at this point. So yeah, well, shit, hell, I'm out in the sun for 3 days straight, chasing marlin. I'm all burnt out, burnt to crisp. I don't know, man. Hop on a treadmill and work out, and suddenly it's like right back that freaking, I don't know, freaking things, Anyway, so back to the ES, and so far we kind of where we left it. Let's see how this whole thing shakes out. So starting off on the long side on the ES, and alongside on the Nasdaq. Nasdaq is the caveat there with that potential retest failure at the highs there. But we'll see how it develops. The only news we have to drive this market today is going to be that 10 o'clock consumer sentiment number, and then we'll see how things develop. Alrighty, guys, we'll leave it there, and I'll be emphasizing the rollover as well. We're rolling next week, on Monday. On Monday, we're rolling to the December contracts. Today, we're staying on September. Alrighty, guys, we leave it there. I'll see you back at 11:30 for the next update. Later.